Cameron, good evening.
Good evening.
You expecting a bounce now?
Well, certainly not this afternoon or tomorrow morning. We have seen enough of a flush within markets that usual technicals would suggest that you could see a little bit of a relief rally, but we have to acknowledge that if you are completely imploding the last 40 years of economic world order over the course of these tariffs, that maybe some of the past rules don't apply. But we have to stick to the numbers and not the emotion. And the numbers do suggest that you have seen some flush signals, which probably get even more extreme after Monday's trading.
At the same time, over the weekend, a lot of calls back and forth from different executive questions about margin calls. We've been discussing that and whether there's anything in the dollar being sold, gold being sold, crypto assets being sold that's suggestive of forced selling. Are you seeing any signs of that?
There certainly seems to be at least a little bit of an uptick in disorder, because what you can see is when correlations rise between stocks on big down days, you see things like the number of names hitting new 20-day lows hit over 76% on Friday. You had the number of names above their 50-day moving average at just 12%, put call ratio at 1.3 intraday. That all suggests this idea of people are selling indiscriminately, which suggests that idea of people are selling what they can in order to offset some of the big losses that they have in other parts of their portfolio.
Let's say people model out what we heard from the tariff regime that was put out in the Rose Garden last week. What are we pricing in? What's the ultimate end game? If that goes into effect, is it recession? Is it stagflation? Does it matter? Have people thought about that?
We closed on Friday trading at 19 times forward earnings on a $270 a share number that implies 11% growth for 2025. That's not a recession in the EPS number, and that's not a recession in the valuation as well, which is why we think that this volatility continues, even if you see that short-term bounce from a technical perspective.
We're going into earnings season. We're here from Delta Airlines this coming Wednesday. You'll hear from the big banks reporting on Friday. But when you think about what you're looking for from corporations, what are you looking for in the weeks to come this earnings season? What are you expecting them to say? What can they say?
Well, I'm expecting them to tell us what they plan to do with CapEx and hiring, because they do know where the tariffs are. They do know the size. They can't sit there and meet with analysts and say, we have no idea. They have to be doing something. What is it?
That interplay between margins and consumer price tolerance, what is that interplay going to look like in the weeks to come when they have to set a price to account for a new tariff, a much bigger tariff potentially as well in the coming days?
If companies are able to pass on price increases to customers, it actually can be good for margins. That's what happened in 2020 and 2021. But we don't expect that to happen this time around, because the purchasing power of consumers' ability to absorb higher prices is much less than it was in a time like 2020 or 2021, when you were giving consumers checks to fund that spending. So we think a lot more of this pain from higher prices will have to be absorbed in corporate margins. The end result of that is that companies will look for other places to reduce costs. They'll start pulling back on CapEx, potentially start pulling back on hiring, turning to firing in order to defend margins. And that's the risk to economic growth.
Have you been encouraged by the fact that Treasuries, Cameron, have been something of a haven?
It certainly is supportive of the idea that you're not going to see this really terrible scenario of the back end of the curve really backing up because of deficit fears and funding of deficit fears. We think that's the worst case scenario in all of this, is that if you see the short end of the curve come down in the expectation that the Fed is going to cut rates, but the back end stays sticky, that means that you don't get the boost from things like mortgage refinancing, and you have continued pressure on corporate funding costs. So that's what we're watching in the interplay with the curve, and that suggestion that are we in an environment where people have less demand for treasuries because of the deficit? At least over the last 2 days, that hasn't happened. But look at the intraday reversal on Friday of the 10-year. That caught our eye.
Well, but Bob, to this point, this administration, when asked about how much they care about markets, they've always come back to the 10-year. They never talk about the S&P 500. The put has always been in the bond market. At what point do you think the White House welcomes this if 10-year yields keep going lower?
So, Cameron, Friday's reversal has just reversed again.
Oh, good.
I'm looking at 10-year Treasury reversal. You know, the 10-year Treasury futures yields are down about 10 or so basis points. I think the focus on the 10-year is very clever because they know that's where the average American's mortgage is set off of. So try to push that down. That's probably where they would like to drive a lot of the Treasury borrowing, further out the curve and away from the front end where it was planted. So they need to do some of that. And then they also know that businesses tend to do a lot of funding out across the curve. So try to bring that down, benefit businesses and households, and of course themselves and government.
It's too cute. Execution risk is too high. Sure, yields might drop for all the wrong reasons. What do you think is going to happen to tax revenue? If yields are dropping because we're all repricing the economy and pricing in a recession, maybe we avoid it. I hope we do. What do you think happens to tax revenue?
I was just saying, having this conversation over the weekend, you got to look at both sides of the balance sheet. Tax revenue falls off a cliff at the same time that, okay, borrowing costs are a lot lower. Does that really get to the ultimate goal of balancing the fiscal health of this country?
You need the growth. We've been running 6% budget deficits with unemployment down at 4%. What does everyone think is going to happen to the budget deficit if we enter a recession?
I guess that this is the question that people have to ultimately ask. Do you believe that this was a deliberate act to try to bring 10-year yields down? I mean, do you believe that, Bob Michael?
No, I don't think you crash the entire U.S. and global economy just because you want 10-year yields a little bit lower. Do I think that the administration has said, here's our tariff policy. Now, Congress, ball's in your court. Here's the Tax Cut and Jobs Act extension plus everything I want to hang off of it. You going to pass it or not? And Fed, hey, you can cut rates. You've cut them before. So conveniently, the ball has been passed from the administration to the Fed and to Congress. Will they take the pass or not? Right now, certainly the Fed looks to be fumbling the pass.
I'm pleased you went in that direction because I think it's a great point. The next stop for this conversation is the tax bill. And Cameron, for a lot of people that came into the new year, bullish this administration, pro-risk, pro-growth, it was the more complete policy platform. Not trade, but taxes. What are you expecting now?
Well, there's a big contingent within the Republican Party that does not want to count tariffs in order to give tax cuts in other places, meaning that they are not comfortable with extrapolating tariff revenue in order to balance the budget. So the big question is, will you really get the tax cuts to offset what is a tax hike with these tariffs? And we're not so certain, which just means that maybe you get the extension of the baseline, but we're not positive that you're going to see this big offset with much lower corporate taxes or lower taxes on consumers, which just means that we get a lot of the pain from the tariffs, not necessarily the offset from lower taxes other places.